Its outlook for 2025 flags certain risks for the market. It expects pain to persist in delivering profits, which may lead to earnings cut. Mihika is here with more. Mihika, what are the other challenges that Nuvama has flagged?
They are saying that 2025 will be challenging. They expect the pain in terms of profit growth to persist and earning cuts are likely. The government has also, while the government spending is expected to increase, and this could, may lead to a near-term spurt, Nuvama states that a sustained bounce in the markets will need credit as well as export recovery. And there are some key variables that you need to watch out for. Trade wars and Fed actions remain critical, but also on what's happening with the US as well as China is something you need to watch out for. They've also mentioned that the traditional defensive sectors do have problems, and this is your FMCG and your IT sectors. You have margin levels which are exhausted in FMCG as per Nuvama, and they've also downgraded the IT sector to a neutral, mainly because of rich valuations, and they also, while their export weakness is behind us, the recovery is still uncertain as per Nuvama. Now, what is in Nuvama's portfolio in terms of sectors? Their key overweights lie in private banks, insurance, pharma, telecom, cement, consumer and chemicals, while the key underweight sectors lie in industrials, power, metals, energy, autos, PSU banks as well as NBFCs. But it is key to know that Nuvama has stated that they have more conviction on their underweight sectors than their overweight sectors. And lastly, they've also talked about why they're positive on the BFSI sector, because this comes despite the growth concerns. They are overweight on the quality private banks and insurance companies, but within the BFSI sector, they are underweight on the cyclical PSUs and the NBFCs. They do say that the banks will now see enhanced focus on profitability, which will limit the risk to downside. They also see asset quality concerns. While they will rise, it's more the PSU banks and the NBFCs that are more vulnerable compared to your private banks and insurance companies.